So welcome everyone to our series Cooperatives in a Time of Crisis. It is my great pleasure today to be in conversation with Rob Wesseling, the CEO of the Cooperators, one of Canada's largest insurance companies that is owned by the cooperative sector. Now, I always like to start these conversations off by asking people to tell me a bit about their journey, how they ended up in the cooperative sector, and if they were from outside the cooperative sector, what they've observed about coming into the cooperative sector. So with that, Rob, I'd like you to tell us just a little bit about your story. How did you find your way into the cooperative system?
Marc-Andre, thanks very much, and thank you for reaching out and doing this. I'm really quite pleased and honored to be able to take part. So origin stories, I think that's what you're after as a starting point. So the very short origin story is that I work for the Cooperators because it's across the street from a bus station. So I have a master's degree in statistics and an undergraduate degree in mathematics from the University of Guelph, where the Cooperators head office is. And as I was finishing my master's degree, I was working with one of the banks in downtown Toronto, getting on a bus every day and looking at the Cooperators sign. And that caused me one day to wander in and see if there was any jobs available. And that is in fact a true story. So it is very much good luck on my part that I landed with the organization. So I wasn't a cooperative person. I didn't actually know what a cooperative was when I walked in our head office that first time. But it became clear to me that it was a different kind of business within the first year, certainly. I tell a little bit of a story about that transition and realization for me. I took a first-year business class at the University of Guelph, and I think about opening the textbook, and somewhere in those first couple of pages, it said businesses exist to maximize shareholder value, and then the rest of the textbook was about how you do that. And it became very clear to me within the first year at the Cooperators that that textbook didn't quite have it right, or at least the story wasn't complete. And ours is an organization, and ours is a sector that exists for a different purpose. And so at the Cooperators, our cooperative exists to provide financial security for Canadians and Canadian communities. That's what's on page 1 instead of maximize shareholder value. And although many of the chapters are similar throughout the rest of the textbook, that difference on the first page is so critically important because it drives our strategy, it drives our decision making, it drives the way that we think and the lenses that we look through as a cooperative business. So, even though in my mid-20s I didn't know what a cooperative was, I think as in my late 40s now, I would hold myself out as a cooperative lifer. I certainly hope that's the case.
So that's a wonderful origin story, Rob. Thanks for sharing that. It's interesting that you bring up this idea of textbooks because there's actually been academic research that shows how cooperatives have been kind of gradually pushed out of particularly economic textbooks over the years. And one of our missions at the center is to try to change that over time. So I'm kind of interested in this other point that you kind of alluded to, which is the kind of process of becoming acclimatized to the cooperative sector. What does the Cooperators do to kind of help bring people into the fold and give them a sense that they're in a place that's a bit different than what they would have otherwise encountered in their other careers or in their other options for careers?
We talk a lot about who we are and what we do with respect to our employer brand. And so it's the outcomes of being a cooperative that we focus on first, and that has been incredibly compelling. We have offices, large staff groups in places like Ontario and Regina, Saskatchewan, amongst many others, but I'll mention those. And we're able to attract individuals who, might otherwise want to work in the big city, so to speak. But the things that we do and what we stand for are really important to new employees, and we've had many join us for specifically that reason. So our commitment to sustainability, our commitment to community, as an example. And then when those staff join us for those reasons, then we start a process of education that highlights that we do those things because of the way that we think about our role in society, because of the purpose of the organization. And so we don't start off by saying we're a cooperative. We start off by saying, really, this is what it means, and then back into why we view our business in that way, and why we act in that way.
So I'd like to seg from that conversation about culturing employees to thinking about how your organization, the Cooperators, has fared during this crisis. What does it look like for you since this thing started really landing in March?
Well, this has certainly been a very challenging and taxing time, I think, for all Canadians. And I do want to highlight that for those that are marginalized, for those that are vulnerable, I think they've likely had the worst of it. And so, the pandemic impacts all of us. It impacts what we can do. It's impacted employment in many cases. It's impacted mental health. But I think we need to acknowledge that there are many in our society that have been more impacted than others. And that's really, that's important to us at the Cooperators. And we seek to strive to identify to meet ill-met and unmet needs. And so that's something that's on our minds and in our activities. But when I think back to, the middle of March, things started to move very, very quickly. One of the first things that we did is we enacted our business continuity plan. We did so about a week before the states of emergency started being enacted. And priority one for us was safety. It was the safety of our staff, of our advisors and their staff, of our clients, and of our communities. And so we essentially shifted our business from what was largely a face-to-face business to what is now largely a virtual business in the matter of a few weeks. Now, it wasn't perfect, but we did shift the business. We sent everyone home out of roughly 9,000 people that would have been in one of our buildings on any given day, any given weekday in Canada. We got down to about 80 that needed to be there. And that's actually been the case up until very recently, when some of our advisors' offices have started reopening in a limited way. So one of the things that I'm really proud of the organization for, is that we found a way to continue to meet the needs of our members and our clients, while also ensuring that we weren't a vector of infection either within our own staff groups or within our communities. And so that was job one. From a financial perspective, I mean, we are a financial institution, as you can imagine. When when the markets really went down precipitously in March, that had a significant impact financially on us, particularly on the investment side of the house. In our insurance businesses, there's an insurance risk side of the business and an investment side of the business, and the investment side of the business took the biggest hit. But I'm happy to say that our capital position remains solid, and we're in this for the long term. So that's another element that I'm quite pleased with. For our members and for our clients, clearly they're experiencing varying levels of difficulty. We're doing our best to understand those difficulties and to try and be there to support them as best we can.
So you mentioned the long term, and it's something that cooperatives, or we often associate with cooperatives, this ability to think beyond the next quarter. So what does that kind of ability to do so, or to kind of give weight to this longer term, allow you to do as an organization? How have you kind of put that into practice?
I think it goes back to the textbook being different. And so the lenses that we look through our decision making, our strategies are different as a result of that. The Cooperators celebrated its 75th anniversary in 2020. Those celebrations, as you can imagine, have been substantially toned down as compared to what we might have expected. But what's really important is that, in our view, we didn't inherit this Cooperators from from the founders and from the people that came before us that were part of the organization. We hold it in trust on their behalf, and we actually hold it for the generation of cooperators that will come after us. And so next quarter's results are important only to the extent that they help us grow and build this organization so that 75 years from now, we can still be relevant and compelling, providing financial security and improving the lives and the livelihoods of those that we serve in the communities that they live in. And so, that is the lens and the thinking when the market started to go south precipitously, when even now, as we go through a period where we don't know what a second wave might look like and what the impacts might be, our lens isn't about next quarter's results. Our lens is about how we ensure this organization is sustainable over the long term. And I like to say the next 75 years because we're celebrating our 75th anniversary right now.
Now, I know one thing that you've been doing, the Cooperators have been doing, because I'm on the board of the Saskatchewan Co-op Association, is that you've been handing, offering money up to these associations to then farm out to cooperatives that might be struggling a little bit with the COVID-19 crisis. Can you tell us more about that and anything else that the Cooperators is doing to kind of realize on its kind of longer term vision and mission in this current crisis?
Yeah, there are actually a number of things that we're doing to try and support cooperative members, to support clients, and to support our communities. What I would point out is that, in our view, the most important thing that we can do is to ensure that our cooperative keeps operating, that we're here to meet the promises that we've made previously. So, an insurance policy is a promise, and that's a significant part of our business. And to ensure that we're going to be here for decades to come, as I talked about earlier. And so we need to keep the cooperative strong and move forward. But at the same time, we need to answer the bell, so to speak, to respond to the needs of our clients, of our members, of the system at large, and of our communities. And so there's a number of things that we've done. So we did commit $200,000. We've distributed it actually to support cooperatives through the COVID Cooperative Assistance Fund. That's the fund that you're talking about. That's been distributed through the provincial associations because we felt that the provincial associations would be better at finding the right places for that money than we would. We've committed over $200,000 to focus on supporting the mental health of young Canadians during the pandemic and beyond that. We've made an additional $200,000 contribution to the United Way. That's in addition to the $675,000 that was raised at the end of 2019, largely by our staff and advisors. So we've topped that up because we know there are more that are in need in our communities as a result of this. I would like to point out that our employees and advisors are also taking it upon themselves to support their communities, and I'm very proud of this. We've had individuals that are using 3D printers to print personal protective equipment. We have folks that have been checking in on their senior clients, delivering them groceries in some cases, and there's all kinds of really interesting and exciting fundraising going on at a micro level across the communities that we serve, which is also something that I'm quite proud of. And then for our clients, we've done a number of things that are aligned with, I think, the sentiments that you've seen elsewhere. So we've offered all kinds of different payment options, payment deferrals, forgiveness for insufficient fund challenges, etc. We've offered ways that premiums can be reduced, specifically for automobile insurance, where the risk is significantly lower, and so we have a rebate program that's in place for clients associated with that as well. And there's more to come because we're not done yet. The pandemic isn't over, and we don't know what all of the impacts will be. But we are doing our best to try and support our members, the cooperative sector broadly, our clients, and our communities.
You talked a bit about, the importance of ensuring the sustainability of the business. And little I know of the insurance sector is that it looks to the past to predict the future, right? There's an actuarial science behind it that studies these longevity of lives, predictions around accidents, those kinds of things. How are you making sense of the world today? It seems like this would be an especially challenging time to predict the future.
It is. We've typically we would pick the environment that we would think we would be operating in, say, a year out, and we'd build plans based on that. And then more broadly, we would pick the environment that we thought we would be operating in after a longer period of time and build a strategy associated with that. And then we would stress test those against some different points of view. In this context, we're actually looking at operational planning and strategic planning differently. So we're actually building distinct plans for various scenarios that could play out from an epidemiological perspective, from an economic perspective. And we're building out full plans for each of those, not knowing which one is going to occur, and then trying to collate those to decide what the best course of action for us is with respect to strategy, with respect to operational elements like pricing, as an example. And we're building in the trigger points in terms of where we'll decide if we need to pivot or not. It's a very challenging time period because the range of possible outcomes is so wide. And realistically, in North America, we'd have to go back to 1918 to get to any sort of circumstance that would be similar. And Canada was just so different then. The economy was so different. The financial services industry was so different. It's really not all that helpful to look back at the history that's more than 100 years old. So you're right. It makes it much more challenging.
So this is one of those areas that I find infinitely interesting, Rob. But I'm struck by the fact that, again, you have to make these decisions about the unknown, looking to the past. In fact, there's a CEO that I read a quote about who said something to the effect that all we know as decision makers is the past. That's all our knowledge is comprised of these past events, but we have to make predictions about this unknowable future. And I'm kind of interested in knowing if you're able to draw on your cooperative board. You have a board made up of cooperatives from across the country, very diverse board. Does that give you any kind of advantage or insight into thinking about that future, points of information and diversity of views that you can use profitably to kind of make predictions about that unknowable, or hard to know anyway, future?
I think one of the biggest advantages of our system of governance is that we have a group of individuals in our directorship that are from financial services in the credit unions, as an example. They are in retail businesses with the retail co-ops across the country. They're from worker co-ops, from healthcare co-ops, from representative farm organizations, et cetera, et cetera. I haven't listed all of them, but I've given you a flavor. And they're also from all across the country. And one of the advantages of that is that the biggest advantages is that we get those insights from all of those different sectors, from all of those different geographies. There's really an immense amount of diversity within our directors group as a result of that, in terms of their experiences and their knowledge bases, et cetera. And so I believe it drives different conversations and different insights than you would get if you had a less diverse group of directors. And I can think of half a dozen occasions at least since the middle of March when those diverse insights have really proven to be very helpful for us as we've worked our way through our decision making, and as we've tried to understand the different points of view that are at play as this pandemic plays itself out.
That's a really rich kind of idea, this diversity on the board, not just in terms of the humans diversity, the demographic diversity, but also the sector diversity that you have at your board that a lot of organizations would not have. And so I think that's a really rich thread. But I want to kind of pivot a little bit to talking about the policy environment. I work out of a policy school, and it's an area that I think has been understudied in the cooperative research community. And so it's one thing that I'm very interested in kind of emphasizing. And so we've heard a lot in this crisis about policy this, policy that, emergency checks here, emergency checks there. We've also heard a lot about how government's really stepped up to help the banking sector, for example. I have heard a lot less about the insurance company. Can you talk to us a bit about what you've seen? What has the interface been like from your perspective between government and the insurance sector, and how do you see that unfold?
In the insurance space, I'll speak about there. I won't talk about our wealth management business too much because I know you're interviewing a number of leaders from the co-op sector that have wealth management businesses. So I'll focus on insurance. We have two levels of regulation, so federal prudential regulation, so capital regulation essentially, and then at the provincial level, the products are regulated. And so we've had lots of interaction at both levels. It's been, I'm quite pleased with how that interaction has played out, actually. The federal regulator has, they've had lots of thoughtful questions. They've made some changes that are appropriate, given that the prior regulations weren't put in place with the pandemic in mind. I think we can say that about so many things. They weren't devised with the pandemic in mind, but the prior regulations weren't. And at a provincial level, the provincial regulators have been very open to us taking some of the steps that I mentioned earlier that really require, if not their approval, at least their blessing. So things like the rebate programs, things like the premium deferrals, et cetera. There's been elements of, where supervision occurs for licensed insurance representatives and things like that. The regulations were built assuming a contact center or a bricks and mortar office. They weren't built assuming that we would all be working from our kitchen tables or from our bedrooms, those types of things. So I think that's worked very well, actually, within the industry through this time period. And I give credit to the federal and provincial regulators, and I give credit to the industry as well for the way that we've been able to manage our way through it. It would have been very difficult if we would have ground to a halt, and couldn't find a meeting of the minds to move forward.
You mentioned earlier in our conversation that Cooperators has adjusted some policies for people who drive cars. They haven't been able to commute or use their vehicles in the way they would normally. Have you observed any other big behavioral changes amongst those who have insurance since the COVID-19 pandemic? I mean,
there's lots of them. In the short term, there's all kinds of businesses that have been shut down. And in some cases that reduces risk. In some cases, it just changes it. And in some cases, it increases it significantly. You can think about fleets of equipment and vehicles that are all parked in the same place that they'd be out working and not in the same place. And so the collection of risk that happens there because they're all parked in one spot. Vacancy is a big issue. One of the best risk mitigants for a building is to have people there to catch things when they go wrong. And if the building's shuttered and there's no one there, it increases risk. By the same token, there's lots of circumstances where the risks have been reduced. I mean, if you're not selling any products, you don't have product liability risk to the same extent that you would have previously. So there's lots of changes, really significant changes in the travel insurance business. I mean, the foreign travel insurance business is essentially shut down at this point for obvious reasons. So essentially every aspect of the business has been impacted in some way because the risks that our members and clients are exposed to have changed and their needs have changed.
So you've been talking throughout this conversation, we've been talking a lot about risk, and I'm a big fan of an academic writer, brilliant person named Nicholas Taleb. He talks a lot about resilience, and he has this concept of anti-fragility. That is, when a system gets stressed, an anti-fragile system actually strengthens and improves. It doesn't kind of fall apart. Sort of, the opposite of what we've experienced in this crisis. And the insurance business, as I said, is about risk. Have you been kind of rethinking the way you approach risk in this environment? Thinking about that kind of resilience question, maybe that anti-fragility question? How do we build a system that's less fragile?
It's I love that question, Marc-Andre. It's one of my favorite questions, actually. The answer to it is frustrating. So I'll be honest at the outset. So let me talk about COVID-19 a little bit, and then if you'll bear with me, I'd like to talk about a broader strategic and philosophical point associated with it. I've heard lots of individuals say that COVID-19 has changed the world, and I would argue that that is completely wrong. COVID-19 has not changed the world in any way, shape, or form. It has simply revealed to us a risk that we were exposed to, and it's one of many. Why is the circumstance so bad? It's so bad because we didn't prepare for it effectively. And I know that's not going to be a popular sentiment, but I do believe that it's true. This is not a black swan. You can line up all kinds of experts. I'm not one of them. I'm not an expert in pandemics, but you can line up all kinds of experts that would tell you that an event like this was coming. But it's a human flaw, I believe, that we don't focus on these big risks that can really impact our health and safety, the quality of our standard of living, our quality of life on a broad scale, and we tend to think of them after the fact as some event that we couldn't possibly have predicted and we couldn't possibly have prepared for. And in my view, it's almost exclusively incorrect to say that. So if I can broaden it out, I think we have a choice to make, and we've always had this choice. But I think COVID-19 is going to. I hope it's going to push it to the front of our psyches as individuals and as a society. And that choice is about how much do we. How much of our resources do we spend focused on making our communities, our society resilient? And it costs money and it takes effort to do that, whether it's a flood that we're focused on, whether it's a forest fire that we're focused on, whether it's a pandemic, whether it's the broad implications of climate change. How much are we willing to spend? How much effort are we willing to put forward in order to make our communities more resilient? After the fact, after the event happens, it's always easy to say, well, if we had done this, but we typically don't do that. We typically focus on the disaster recovery, and then we move on, and it's quite unfortunate. I think co-ops have a real role to play here because, as we talked about earlier in this discussion, we're not in this for the next quarter or for the next year. We're in this for the next decade or the next 75 years. And through that lens, it just makes an immense amount of sense for us to have a much more significant investment in resilience for our members, for our clients, for our communities, for our cooperatives than is the case now. So I'll stop there because I've answered in part a different question than the one that you've asked.
No, I love when conversations move where they need to go, and so thanks for that, Rob. It's interesting you bring up this point of resilience. I mean, I asked the question, but our center is actually involved in a proposal for research around how the cooperative sector could be used as part of a resilience strategy. So at a nation state level or a regional level, how governments and the cooperative sector could be instrumental in building resilience and addressing, crises kind of events like COVID-19 pandemic. Now, I always like to end my conversations by asking my interlocutor if they have something they would like to add to the conversation, something maybe I didn't ask. So is there something you'd like to add, Rob, that we maybe haven't covered but wish we had?
So I don't think there's any other messages. I wanted to make sure that I had an opportunity to share the thoughts that I've just shared in terms of how important it is that we focus on building resiliency into our Canadian society, into our local communities, and into our global society as well. If there's one learning that comes out of this great human tragedy that we're living through, I hope it's that. And if we do act on it, I think the silver lining from a societal perspective could actually be more important than the cloud. So let's strive for that.
So thank you so much, Rob Wesseling, for this really engaging conversation. Really appreciate your time today.
Great. This was a lot of fun. Take care now.